FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 9/18/19. Well, today is Fed Day. Rates are assuredly heading lower, but how much lower is the question? My next guest believes it's going to be a paltry 25 basis points cut. He's probably right, but when you're dealing with the Fed, who knows? We do know that everything is headed lower. We're headed to negative interest rates. What does that mean for you? How low do you think rates are going to go? Well, write us. Let us know your thoughts. KL@kerrylutz.com. Well, Nick Santiago in the Money Stocks is with us now. Nick, you've had quite a run of effective, successful calls. What is going on now?
Well, today we have the big FOMC meeting. The Federal Open Market Committee is going to meet at 2 o'clock. That's going to be followed by a Jay Powell press conference at 2:30. They're expected to cut rates by another quarter point, but I think this is probably it. If you look at the bond market and you just look at the 10-year U.S. Treasury note yield, months ago I was calling for yields to go below 2%, and we did that. Now, if you look at the market, yields have really put a little bit of a floor in there. So they've come off the lows pretty nicely. They got up to 1.9% on the 10-year, and we'll see what kind of pattern is formed over the next couple of weeks. I don't think bond yields are soaring higher from here, but we might have a little bit of a bottom in bond yields. And I know everybody's expecting yields to go to zero. I keep seeing
negative
TV reports. Yeah, negative, and we're not doing that. I don't see that happening in the United States. If it did, we got bigger problems then. But I don't foresee it. It would be the worst thing. It would be total calamity if that happened. So really what I think is happening now is that you watch the tape, and that's what I've been doing. And I've been watching the bond market, the 10-year U.S. Treasury note yield in particular, and I'll be seeing what that pattern forms over the next couple of weeks. And ultimately, I do think bond yields are going to start to move up, and we may have some kind of a short-term top in the bond market, meaning bond yields will start to rise.
Interesting. So you're kind of a lone voice calling for that because the whole world is saying that we're going to go negative, and really that would be a total calamity, wouldn't it?
Yes, it would. And remember, I was a lone voice when I was saying that yields were going to fall, back down below 2% when they were all the way up above 250. So I like it that way.
Hey, you're the lone voice of reason in a wilderness of insanity here. I mean, look, we're going through crazy times economically around the world, and nobody seems to be very concerned about it. Nobody's taking it seriously, Nick.
No, they're not, but they will. They will. Every time in history that we've had this easy money, and I mean, we have easy money. It's basically print money and throw it out of a helicopter, and that's been going on for over 10 years now. Nobody seems to really care because central banks can intervene. But what people don't realize is that it's probably starting to unwind already. If you just look at stocks out there like Deutsche Bank, new all-time lows. Here we are 10 years into a recovery, and they're, doing more quantitative easing. So a small unwind right now, but in the next couple of years or sooner, we're going to see a really big unraveling, and that's probably the ticking time bomb. Europe is really a disaster.
One thing I wanted to just go over with you, Nick, we had this meltdown in the repo market. So repo market, those are called repurchase agreements, and there's reverse repos, and they're a major underpinning of the worldwide financial system because holders of treasuries raise cash and they try to get a little more yield. The buyer tries to get a little more yield, and because the collateral for the transaction is usually a treasury bond, there's considered to be virtually risk-free. But now rates went from 2.25% in one day to 10% 2 days ago. What is your take on what's going on there?
So that happened yesterday, and then today they had another auction, which didn't go as wacky, but it was somewhat wacky, and it was oversubscribed. This is reminiscent of what happened in 2008. So, I mean, I don't think it's the same thing there. It was blamed yesterday's move to 10% and the short overnight lending money was really blamed on a technical glitch. But today we had another glitch, I think. So, this is worth keeping an eye on. I don't think we have to make too much out of it at the moment, just because the markets don't seem overly concerned. But it could be a shot across the bow, and it could be talking to us. But that certainly was quite something yesterday. And I was very surprised that we didn't see more panic in the overall markets themselves. That's unheard of. And if that happened, liquidity would dry up very, very quickly, and markets would freeze.
Yeah, and the repo market is so important. It's the most important market that nobody's ever heard of, right?
That's right.
About FX, right? We know about treasuries and all that, but this is a shadow banking market that's been around since 1917, Nick, since World War I, when banks needed to raise money and the Fed stepped in and they created this facility, and now banks themselves do these repos. It's really, like you said, could be a shot across the bow.
It really could be, and most likely it is. We just don't know it yet. So, sometimes these things, they have like what we call ripple waves. You got that first little ripple, and that ripple continues on, and it starts to affect other things. But yesterday's action was not good. Even today's action, I know it's being sugar-coated, but that wasn't very good either. I think they were trying to have this go off successfully. It didn't go off as bad as yesterday, but today there was, I believe, 80 billion in bids submitted. So that was 50% more than yesterday. So there's definitely some problems going on there. And, this is the first time that they've done a repo action in 10 years. So I think it should be watched and followed, because it could have repercussions down the road.
Yeah. Hey, I completely agree with you. We've seen this show before. This has happened before. And back in 2008 was different reasons, because the collateral the banks were using, it has to be AAA rated. And these, those mortgage-backed securities were considered AAA one day, and then the next day they were junk, and all that collateral became worthless, and panic ensued, and banks no longer trusted banks. It really broke down the open market, committee, the Fed funds financing that banks use, overnight lending, borrowing. It really threw a monkey wrench in the system. This time it seems to be localized, but if the Fed can't get a handle on it, and it kind of spreads or cascades, we could be looking at the opening bell for the meltdown, the next meltdown.
Well, you got to remember, if the overnight financing rates and they jump and yesterday jumped to 10%. I mean, that's unheard of. They should have been somewhere in the low twos. Yeah. So that is certainly problematic. And even today, I think they were as high as 5.25. So that's still not normal. I know they were blaming it on a technical glitch, but listen, it's a market. I don't see how there's a technical glitch there. But that's just my opinion. There's
a lack of money out there. Lack of liquidity is what it shows to the uninitiated, exactly right, like myself. I don't pretend to understand it. Oh, one thing I should mention is these repos generally are short-term. They're not necessarily overnight. They could go up to 2 years, but generally they're very short-term loans. And, it's when you see that market, and that's a real bellwether market that nobody follows. When you see that one have a hiccup, you got to wonder, where do you think it's going to be next?
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential, as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
like I said, it's a ripple effect, and it may not show up today or tomorrow, but that's the same thing that happened in 07 and 2008. Didn't show up right away, but when it showed up in a big way. So it's definitely worth monitoring, and I don't like what we've seen from it. I think that is problematic, but like I said, nobody's really concerned about it so far. But it could show up in the picture, and hopefully I'll see other things in the charts that will tell me, hey, be concerned.
Mm-hmm. Yeah. Well, so if it is indicative of something, what do you think the next shoe to drop would be? Any ideas?
Well, to be honest, this market, regardless of what you're really looking at, it's just gone up on central bank liquidity. We really have not had a recession or any kind of real meaningful correction. In fact, every time the market has dropped 20%, the stock market, it's been revitalized right there. It hit 20% in December to the penny, and then we bounced back up right at Christmas. And that's not normal. Markets are supposed to go through recessions. They're supposed to go through hard corrections. That's what takes out the excesses out of the system and allows for true price discovery. But we haven't had true price discovery. Even now, where the markets are basically or near all-time highs, we're getting a rate cut today. We have a labor force that is full labor. It's just absolutely absurd what's going on. And it's not just the United States and the Federal Reserve, but it's all the central banks around the world. They're all basically creating this big liquidity stream and trying to keep asset prices propped up. So I guess that's the game now.
Yep, that is the game. Just their main indicator is the stock market, right? Everything is fine as long as the stock market stays together. So what about the stock market? I'm surprised it didn't have more of a reaction to the repo meltdown.
Yeah, so if you recall, back in April and May, I was calling for a May decline, and we got that. We had a sharp 1 month decline in the S&P 500 May, from the start of May all the way to the start of June. And then the markets went up and made a new all-time high. Then we had the August swoon, and we came down pretty sharply. And now we're right back up towards the highs again. And here you have, the Federal Reserve basically cutting rates by another quarter point today. At least that's the expectation. So I don't really love the market right now. I've been very, very selective in my long trades, just buying things that people really don't, that haven't been popular. I own Pfizer. I own, things like that. Recently, I took a trade on Prudential. I made 10% on the second half of the position in about a week. But that was because bond yields were going up, and I saw the chart was telling me to get into it. But I've exited that position already. So basically, you want to own things where people will need them. They need drugs. Everybody's going to need their pills. Everybody's going to need toilet paper and toothpaste. So, you want to own stocks like that, but you don't want to own them if they're high on the chart. You want to own them if they're beaten down a bit.
Yeah, exactly. You don't want to be buying things that are trading at multi-year highs. So
if they're at a premium, you have to really lay off of them. We've seen where just a week or two ago, everyone was saying money's coming out of all the hot sectors. Well, really what money was doing, money was coming out of the new 52-week highs, and it was going into stocks that have been beaten down, which we call value plays.
Right.
So that's really what I've seen, and I think that could continue for a little bit. But I'm very, very cautious overall markets right now.
All right, precious metals, our favorite. What are the numbers telling you at this point?
So we've had a tremendous, tremendous run in gold, and the last time I was on your show, I think I talked about if gold could get above their 50% retrace, they could actually make a bigger move to the upside. And we saw, I believe, spot gold trade as high as 1566, and then we've had a pretty good pullback down to around 1500. Today, you see gold trading out around 1516. The bottom line is we just got overbought. We just had too big of a run. But I ultimately would love, and I anticipate gold to consolidate here for a bit. And then as we go into next year and beyond, it just starts to take off again. I think it's been locked and loaded to the upside. Right now, we're just looking at the next consolidation phase. If anybody is going to short gold for a long period of time, that's where they're going to catch you, and they're going to use that as fuel and squeeze it up. But, I mean, I actually like gold for the longer run. In the short run, meaning the next month or two, I think, we could be somewhat in consolidation. But 2020, 2021, 22, I think precious metals go a lot higher.
Hey, you know what I thought was interesting? So it's consolidating at this point. It pulled back from 1550. I think that was a close, or real close to it. It was almost over 1550, and then the raid came. But every time gold looks like it's going to head lower, and this has been the trend for the past year at least, probably more than that, something happens and it shoots up. Like over the weekend, we had the Iranian, and I use scare quotes on that, attack on the Saudi oil facilities, and that knocked it back up over 1,500. So that is a really interesting phenomena. What do you infer from that, Nick? What do you get out of that?
Gold is the ultimate fear trade. So anytime there's any fear in the market, money is going to go into the gold market. That's just the way it works right now. But just the fact that we've had all this easy money, and you see gold still moving sharply higher, it just tells us, what is Europe going to do next? They're not going to stop printing money. It's already telling us what's going to happen. And then if you look at the Bank of Japan, or even look at the People's Bank of China, and even the Federal Reserve, I mean, we're cutting rates today. So basically, it's just telling you that gold can simply move higher. And then when there is inflation, and I do believe we will see inflation. So when inflation starts, that's when gold really makes its move. Right now, we don't really have much inflation out here, but when inflation does begin to kick in again, and it will, especially here in the U.S., you're going to see precious metals will start to really, really rise, and other commodities will start to catch a bid as well.
Interesting. So you think we're going to get inflation, huh?
Yes, I do. And it's not going to be good inflation. No. That's the problem.
Yeah, that's pretty funny, I mean, it's not, what I mean.
That's the way it works when you do all of this central bank intervention and you don't let markets operate the way they're meant to operate. There's so much interference. That's why you get these big distortions.
Mm-hmm.
And that's why I use charts, because I can't figure it out. I just look at the charts and just do what the charts tell me.
Yeah. Huh. Well, yeah, the charts don't seem to lie, or if they do lie, it's very quickly they correct themselves. So you really can't win betting against the chart, can you?
No. The charts are, I mean, what is more important than money flow, right? When one of these politicians commit a crime, what do? We follow the money. So why not, when you're trading the stock market, just follow the money? You're basically looking where the money's going in. You're watching the pattern. The patterns repeat themselves. And that's really how you make money in this business.
Mm-hmm. Yeah. I totally agree with you, because I've seen a lot of people with a lot of different systems. The fundamentals just aren't going to work. They will identify opportunities, but then you never know when that opportunity is going to come to fruition just working on fundamentals. You got to have some type of technical analysis in your toolbox to really appreciate what's going on in terms of, the cycle, where we are in the cycle, and how it's going to affect you. So
absolutely, because just look, Kerry, at some of the patterns, like just say the bond market recently. It just had a tremendous run as bond yields were falling. Bonds obviously go higher. But that pattern at the peak is not a pattern where the average investor would know to sell. Only a technician would know to sell that pattern. And again, that's where you say, hey, this is now a parabolic move. That chart pattern indicates it's euphoria, and then you get out of euphoria. You sell euphoria. Basically, yeah. John Templeton, the legendary trader, said, all markets peak on euphoria, and they all bottom on extreme pessimism. Mm-hmm. So, you always want to remember that, anybody that's listening today.
Yeah, that's so important. Hey, so the dollar, you still are looking for it to go higher, right?
Yeah. I mean, what is really changing with the dollar? I mean, in the short run, today we're going to get a Fed rate cut, which is already baked in. So you may get a little sell the news on the dollar. Dollar could pull back to maybe 97, but really what the dollar is doing is just consolidating between 98 and 97, and the longer it consolidates, the higher it's going to go. It continues to go higher. Europe just pulled another quantitative easing. Japan will probably likely do the same, although I don't know what else they can do. They're already buying equities, so I don't know what else they could really do. They own everything. What else? Where is money going to go? It's going to go back into the dollar. It's going to go into gold. It's going to go into hard assets. I mean, where is capital going to go to? I mean, this is, it's not that the dollar is the greatest thing in the world, but it's the best house on a bad block, and that's where everybody goes.
Like we said, it's the Taj Mahal of Baltimore. So
that's right. That's
right. but yeah, they're going to go to the dollar. Probably real estate too, because Martin Armstrong has said many times there'll be a flight from currencies, weak currencies, into stronger currencies and into hard assets, of which stocks are more of a hard asset than just holding cash that depreciates, or securities. So they'll go into stocks as well, and gold and real estate, right? Things, stuff.
Yeah, and it'll go into something tangible, and that's what we're going to see. And I ultimately think we'll get a run, in copper and things like that in due time as well. So, that's the theme, and that's ultimately what the charts are saying as well.
Yeah.
More importantly.
Yeah, and the charts generally don't lie. You might misinterpret them here and there, but they don't lie. So 6 months ahead, gold. I think you can safely buy gold now for your own physical accumulation, and pretty much not worry about the dip.
I would wait for every little dip, and I think if you don't own gold or even silver, silver had an amazing run too.
Yeah.
So if you don't own gold, you don't own silver, and every dip, you just start to accumulate. That would be the wise thing to do, because it's very, very difficult to time these events that come along, just like you had last Saturday with the Saudi Arabia oil field attack, right? We don't know when this stuff is going to happen, but basically every time you get a substantial move in gold, just start to accumulate. I think everybody should have 10% of their portfolio in the precious metal. Oh,
for sure. For sure. Really, if you haven't done it already, probably a good idea. We didn't really talk much about silver, but silver went up proportionally more than gold. Now, of course, it's pulled back proportionally more than gold. It was getting close to $20 the ounce and then got hit. And now, right, it's right around the $18 mark.
Yeah, so if you look at silver, right, I was expecting a move just above 18. It actually went to 19 and a half. So it was a sensational move. But whenever, I wish we could show the charts here, Terry, but whenever you have this parabolic type move, that's unsustainable. It was called a breakaway move, and then you're going to pull back in. But, silver gets down to $16.50. I mean, if you're not in it, that's another great opportunity to get involved in, 16.5 to 17, start to accumulate silver. I mean, I have a silver bar on my desk right here. I have tons of ounces of silver, and I've accumulated it, and when nobody even talked about it. So, I've been well positioned, but I've never sold an ounce of any of my physical gold or silver bullion.
Yep.
And I've been accumulating since 2003.
Same here. I've been accumulating since 1999, but most of my accumulation was right when the crash hit, because gold and silver really took big hits and they immediately bounced back. But I don't see necessarily a crash where that would happen this time, but who knows? Well, anyway, inthemoneystocks.com. Check out Nick's work. Check out us, financialsurvivalnetwork.com. Where do you think the dollar's heading? Where do you think stocks are going? Just email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Nick, we will talk to you again real soon.
Thank you, Kerry. Have a great day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.